All right. Welcome, everybody, to the CHYE workshop. We bring you the information you need to know when you need to know it. So we're very excited to have Reb Meir, Controller for CHYE Lifeline, very well-known and large tzedakah organization, a professor of these subjects, as he'll tell you himself. It's timely. Tax season is about to come to an end, and for those of us that run our own businesses, and especially if we have employees, it's important to know how to file properly, and there's all sorts of important rules and laws to know. So we're thankful to Meir for coming all the way in from Lakewood to share with us tonight. Feel free to ask questions in the middle. The program will go for 45 minutes. After 45 minutes, we'll stop, and from there it'll become informal. You can ask more informal questions, and you're welcome to stay later. Without further ado, Reb Meir, the floor is yours.
I speak very loud, so I may not need this. It's up to you.
No, it's just...
I understand. Okay, thank you, Yeshua. I appreciate it. It's a wonderful organization. Let me just give you a little background. I am a CPA. I used to live in Pittsburgh. I'm sure many of you have heard of familiar with Pittsburgh. I was a controller for the Pittsburgh public school system, and then Min Shemayim, when I moved to New York, I was involved with school issues, and HASC needed a controller that day that I was looking for a job. So I was the controller for HASC for about 5 years, and for the past 8 years, I've been the controller for CHYE Lifeline. In addition, I do teaching. I teach for Ocean County College, teach for Fairleigh Dickinson. The way I got started with Ocean County College was that there was a program through the yeshiva in Lakewood, and they had the last course was a very specialized course of government non-for-profit accounting, which was something that I specialize in, and the college needed somebody to teach, but by union laws they give it out to their staff first. And what happened was a lady took the job, and that created a problem. So what they did was that they scheduled the classes on December 25th on Sunday night. Well, I don't know if this should be on record, but they scheduled the classes when this lady wasn't able to come. And since then, for the past 8 or 9 years, I've been involved in academia also. Thank you for coming. I hope it's worth your time. Okay, I get a call from Rabbi Shem Tov, Camp Gum, Israel, and he tells me that, Mr. Pfeiffer, I hear you're a plumber for the month, middle of June, July, and middle of June, July, and August. I want you to be on campus in Parksville, and whenever a toilet breaks, I want you to go and fix the toilet. I want you to be there from 9 in the morning till 7 at night, and whenever a toilet fixes, whether it's in the main building, all the way out to Siberia, wherever it is, I want you to go ahead and I want you to have that responsibility of going and fixing that toilet. I am a salaried employee. If Rabbi Shem Tov calls me up and says, I hear you're going to be in the mountains for the summer, maybe you'll be somewhere in the vicinity of Parksville, whenever a toilet breaks, we'll call you. And, well, in the first case, I forgot to mention, we're going to give you the tools, and we're going to give you the tools to fix it, and we want you to go ahead and do it. However, what happens if he calls me up and says that, I hear you're going to be in the neighborhood for the middle of June, July, and August for the summer, and whenever a toilet breaks, we're going to call you. Hopefully you'll come down and you'll be able to fix the toilet. We don't care if you come down. We don't care if Joe the plumber comes down. Just try to get the toilet fixed as quickly as possible, and we'll pay you per toilet. Okay? I am, and you use your tools, and again, I don't care if you do it. I don't care if you send Joe the plumber down. I am an independent contractor, no different than somebody coming and doing commissions. Now, we're going to talk in a little bit about what's the difference if I am a salaried employee or an independent contractor.
Before you get into that,
I was just wondering if I was starting to answer your question. Yeah,
that's very good. But you've mentioned so many variables, so he's using his own tools.
Okay, great question.
What happens if one of them changes?
Okay, the IRS, if you look on the handout I gave you, it says the IRS 20-factor test. Okay, the IRS has guidelines of what's considered a salary employee as opposed to what's considered. Just take a few minutes for time. First of all, look at the handout. It says it says the IRS 20-factor test. Just go to the last page. Flip over to the last page. Flip it all the way over, and just look what I have marked. See where it says, also remember the IRS will consider? Just take a minute, scan through that, because it's telling you there's no magic number. The IRS is not telling you, the IRS is just giving guidelines. So take a minute and scan through that, and then just quickly scan, and that will answer your question. Quickly scan what the IRS is looking for. And that will, again, these are basic general guidelines. So just take a minute and look, just scan through that, just scan through the 21s. I'm sorry, go back to first page and just scan through this. Just for time's sake, just scan for it just to get an idea, and then you can go back and do it on your own.
So if the IRS wants to sue you they can for any reason, more or less. It doesn't matter if it's a fact or not, because they can take in any information.
Well, I'm going to get to all that. I'm going to get to that. Okay? But the IRS set guidelines. Okay? Nothing, it's not, you're right, it's not black and white, but the IRS set guidelines. Just take a few minutes and look at the guidelines. The guidelines are basically control. How much control do I have? Now, I'm just going to go on just for sake of time, but I just hope just get the basic understanding. Now, for instance, let me give you another example. I teach students for Fairleigh Dickinson. I teach a prerequisite class where they have to pass a CLEP in order to get into the master's program. These are people who have a bachelor's of Talmudic law from the yeshiva. In order to get into the master's program, they have to pass a CLEP. Okay? Now, if the college tells me, you know what, the goal is for the students to pass the CLEP, but I want you to be here every Tuesday and Thursday from 7 to 9:30. Here's the book, and I want you to teach them, and you have to teach them, and the goal is for them to pass the CLEP. Okay, I'm a salaried employee. If they say you can do whatever you want, you never have to see them, you're on your own hours, you're wherever you want, chances are I'm going to fit into the independent contractor. Okay? Now, typically when I teach this class, I'm in a room of about 20, 25 married men, and I will say, how many of your wives are therapists, OT, PT, speech language therapists, how many are there? Typically, I'll get 6 hands. I say, how many of them get a W-2, which is a salary employee, which I'll explain, and how many get a 1099, which is an independent contract, and I'll explain that in a minute. Typically, I get 3 hands each and 3 hands each. And I say, well, the ones that you get the W-2s, your wife does center base, she comes into the school, they give the hours, and they tell her this is the curriculum, this is and they shake their head, yes. The ones that are getting the 1099, that are independent contractors, typically they're going homebound, even though they're teaching the same class, just like fixing the same toilet, but they can make their own hours, and they do their own paperwork, and they don't get paid for the paperwork time, and typically I get a yes on that. So again, the conditions the IRS set is basically in the handout. When you have a chance, just read it. But it's basically an issue of control, of licensing, and those type of things. What is the difference if I'm a salaried employer, or what's the difference if I'm an independent contractor? So take a look at the handout where I have something looking like this, where I have an Excel spreadsheet on the front. Not the one that has a 1040, but the one that has an Excel spreadsheet on the front. Okay, flip over onto the inside page. Okay, now, if I am a salaried employee, before I begin to work, okay, there are rules that you can give them up to 30 to 60 days, but let's keep that. Before I can start work, I need to fill out at least 2 forms. One is the W-4. Okay, that's the one I have on the inside. The W-4 tells it says who I am. It says who I am, my social security number, and it also tells the employer how much withholdings to take from me, how much taxes to take out of my pocket in order to give the government, because I am a salaried employee. And because I am a salaried employee, you have to take taxes out of my pocket. You have to take earned income tax. We're going to talk about Social Security tax if we get a chance. But you have to take earned income tax, a certain percentage, and you tell the IRS and you tell the employer on line 7 how much taxes to take out out of my weekly check or my bi-weekly check or my monthly check, how many exemptions I claim, and basically, now in today's day and age, this is all done through the payroll company. You just give the employer signs their name, and you sign your name, and you tell the employer how many, what to take out from my pay in order to give to the IRS. And again, this is typically in today's day and age that's done by the payroll company, but they just need to know how many exemptions you're going to claim. If you're over 65, you get one. If you're blind, you one. For you and your wife, each of your children. This is something that we typically do when
businesses use payroll companies?
Typically, yeah. Unless you're very big or very small, it doesn't pay not to use a payroll company. The payroll companies it's just relatively small. And if you make a mistake on your withholdings or you don't submit something to the government, it's a very costly mistake. The mistakes can be very costly. So again, unless you're very big and it pays to do it internally and have your own HR with your HR, it doesn't pay not to have to have somebody do it. They charge you per check. It's the mistakes and the time. It just doesn't make it worth it not to do your own payroll company. Okay, so the first form that I need to fill out is how much taxes to take out of me. How much taxes to take out, and that's a W-4. Now, if you flip over, there's an I-9 form. The I-9 form tells again, remember, I'm an employee. Okay, so the I-9 form tells the employer that I have legal. Is the heat on? I get warm. Is it on, or is it able to turn it off? You don't hear it on. Fine. Okay, fine. I just get warm. I get lightheaded. It's up to them. If they don't mind. I just get lightheaded, but it's okay. If it gets cold, you turn it off. Okay. The I-9 tells my employer that I am legally able to work. I need to provide information to my employer that I'm able to work. So if you look on Form I-9, this is all the information. This is information I give to the employer that says I'm legally able to work. Now, what information do I give to the employer to show him that I'm legally able to work? Flip over this page on the other side of the page. I need to give the employer certain information, either something from List A, a passport, something with a picture of it, or something from List A and List B and C. Okay? So in order to show that I'm able to work, I give the employer something from List A, one thing from List A, or one thing from List B and C. Okay? So those are the things. So again, the first day when I start to work and I am categorized as a salary employee, so then I need to fill out a minimum of 2 forms. The W-4 that says, here's the taxes you have to take out of me, and the I-9 that says I'm legally able to work in the country. Okay? Now, what happens if I'm Joe the plumber and I'm off campus or I'm categorized as a independent contractor? So if you look over here, it says on the next page I fill out a W-9. Instead of filling out a W-4, I fill out a W-9. A W-9 just tells the person. Now, let me clarify. If somebody's coming to my house to do some plumbing, they don't need to fill out a W-9. The only time somebody needs to fill out a W-9 is if they're coming to my work. And either I get a tax deduction for it, or if I'm non-for-profit and the company is going to put it on their tax returns. If it's a business expense, then the business cannot pay me until I complete a W-9. Yeah.
What's this thing about anybody who gets more than $600?
Just give me a few minutes. Give me a few minutes, okay? 600 plus. Okay?
Oh, right.
Okay. Okay. What's that? Okay. Okay. See, here's a story with. You're talking about the I-9?
Yeah.
Oh, typically it's the HR person. Typically it's the payroll department and the HR person. It's anybody in the company who takes responsibility for some degree of hiring. In my department, it's the bookkeeper. They sign off on the I-9.
But like a more junior manager, HR associate would be
Anybody who's authorized. Anybody who's authorized. In my business law class, you will learn about agency, the agency law, and that will come, right? In the agency, Torah? We'll learn about agency laws. You took business law? Okay, you'll learn about agency laws, and you'll see what responsibilities somebody else has. Okay? So, therefore, if I'm going too fast, just slow me down. Just watching the clock. Okay, so the W-9... If you look on the W-9, so the W-9 is if somebody's coming to my work and they're going to perform a service, okay? And they're coming to my work and they're going to perform a service, they have to complete a W-9, okay? Now, just take a little minute and look at the W-9, and the W-9 tells me who I am, the name of my business, what is my, part 2, what is my tax identification number. If I'm an individual, right, Joe the plumber is an individual, he's going to put in a social security number.
You only do this for someone who's going to come multiple times. So if I have a plumber come here, if I have a guy, that's what I'm saying, I had in my you tell me if I'm wrong here, right? I've had life insurance, there's been a bunch of floods here. We've had a guy come. We don't have him fill a W-9. His work was way more than $600.
I'm going to get to it. Okay? I'm going to get to it. So basically, the person fills out a W-9. He says who he is. He says his social security number. He signs it. But it's very important. Look what he has to check off who he is. Under business name, he checks off, am I an individual? Am I a corporation? Am I a partnership? Am I a trustee? Am I an LLC? He has to check off who he is. And I'm going to get to that, and I'm going to answer Yeshua's question. He has to fill out not only his name, his social security number, his address, and who he is. The reason why he has to fill out who he is, we're going to come down to in a few minutes over here. Okay? Now, what's the difference if the person is, if I'm jumping around, let me know if I'm not answering the question. What's the difference if the person is a salaried employee, independent contractor? So far we know what forms he fills out. Okay? Now, what else do we know? Look at the last page in this handout over here. Okay, last page of the handout, the one that starts with the Excel spreadsheet. Okay, now, if the person is a salaried employee, right, I'm on campus in Parksville from 9 to 6 at night, and I'm a salaried employee, so therefore Camp Gun Israel will take money out of I fill out the W-4 to tell them how much money they take out of my pay to give to the federal government, to give the state government. They take out withholdings from me. We're going to talk about Social Security in a few minutes, but they take out withholdings that they send to the government, and me, at the end of the year, I get a W-2. I get a W-2 that says that it gives me the name of the employer and Camp Gun Israel and how much I earned. And how much federal taxes they took out of me, how much Social Security they took out of me, which we're going to talk about later. And it says who the employer is, and it says who I am. Okay? It says who the employer is, and it says who I am. Now, just as a practical note, if the employer is an individual, meaning he's not a business, but he's an individual, right? He doesn't want to give his Social Security number away, so he only has to put the last 4 digits of Social Security. Let's say I have a business and somebody comes to my house and does work, and he's an employee of mine, and I have to give him this W-2. I don't have to give away my Social Security number. I can just put on the last 4 digits of my Social Security number. That's just something practical. But as an employee, he's going to get a W-2 because I took money out of his pay. He worked for me. He was supposed to get $700, but he only got $550 because I took $150 out of tax, which we're going to talk about soon. You can turn it off if you're cold. It's up to you. I'm comfortable now, but it's fine to keep it on for me. He can take. He took money out of my pay. So therefore, since he took money out of my pay, we have to send that into the government, and he also gets a W-2, which I'm sure many of you are familiar with, that says that we took money out of his pay. But if he's a independent contractor, if he's Roto-Rooter, I don't use Roto-Rooter, you'll see why in a minute, but if he's Joe the plumber and he's coming, or if I'm an independent contractor where the university considers me an independent contractor, they're not going to take out any withholdings from me, but there's a possibility where they will send the information to the IRS that they paid me money. That's on the bottom, the 1099 miscellaneous, where they're going to send, where again, they're going to say, what's the name of the business? In this place, let's say it's Camp Gun Israel. They're going to say who they are, who I am. And on number 7, they're going to say how much they paid me.
Is it all federal, state, city?
The W-2 is going to go to the federal government, is going to go to the state government, because chances are there were state withholdings, and local, depending on the locality. If there is earned in Brooklyn, there's earned in New York City, there's earned income tax, so they'll send it to the local government too. And then one second. Actually, I take that back. The employer sends it only to the federal government. The employer sends quarterly reports to the state and local government too. The employer sends quarterly reports, and they also give the employee enough copies to put with their tax return. They give the employee enough copies to put with their tax return. They give one for the federal, one for the state, one for the local.
The W-2, what does he pay and what doesn't he pay? If you're withholding it.
Well, you do your taxes and you see how much he has left to pay and how much he doesn't have left to pay. Yeah.
Just a quick question. If somebody, let's say, works for you, deal with temp agencies. So, for example, I have people as W-4 or W-2 employees. Let's say I have once in a while, let's say some sort of handyman is working for me in a warehouse. I'll have to do work after hours on the side on his own schedule. Would he be getting?
Okay. You're asking if the same person get a W-2 and a 1099. Is that you're asking?
Correct.
Okay. The only time the same person can get a W-2 and a 1099 from the same company is one of two things. Either his status changed in the middle of the year, meaning in the first half of the year I was an independent contractor, and then they actually took me on as an employee. So therefore, in the beginning of the year, though, I was an independent contractor, but then they actually took me on as an employee. Then he'll get one. The only other time is if the jobs are so totally different. For instance, let's say they come and they say, I want you to fix toilets, and I want you to say a shir in Gan Israel. Okay, so the jobs are totally different. I guess Lavdil, but the jobs are totally different. But then I could do that. But if in your case where I'm doing the same job, but the contractual relationship is different, if there's part of it I'm a salaried employee, I will be a salaried employee.
What about base plus commission? On his question, what about if a guy's getting a base salary and then commission can be on a 1099?
Again, typically you won't. But there's another.
I had base plus commission. It was always 1099.
Okay.
The base was the 1099.
We're going to if we get there's something called a structured employee, statutory employee, which we may get to, we may not get to, and that may answer statutory employee, which is on Schedule C, line 1, and that may answer your question. But if we get to it, that may answer statutory employee. What we get to when.
Going back to the original topic of the 1099, who the employer sends the employee.
One second, I just want to answer. I answered the W-2 question. Okay, now I'm getting to the. So, did I answer your question? What?
Yeah.
Okay, so now the question is. Okay, now the 1099, the employer will give. Okay, so now let me clarify on the 1099. The employer will give the employee. It's not this is an independent contractor. He's not an employee. He will give him a 1099, which I have, which is on the bottom over here. He only has to give him a 1099 if he's a corporate. You would have him fill this out to say who he is. But if he's a corporation, right? If Roto-Rooter is coming to fix the toilets, then you're not going to give them a 1099. But if Joe the plumber is an individual or a partnership, then you'll give him a 1099. If he's incorporated or he's called an LLC, which I don't really want to get into the logistics of that, I won't give him a 1099. I only have to give him a 1099 if A, he's an individual or a partnership, B, he makes $600 or more, not $600 or more in a calendar year, and C, I only have to give it to him if he performs a service. Okay? If he's selling me goods, I don't have to give him a 1099 only for services. Now there's a few practical issues I want to talk about. What?
Clear about that. If it's a corporation, you do not have to give a.
if the person providing the service is a corporation,
LLC as well?
correct.
So, oh.
No. If the not the person who not the person who's getting the service. If the person giving the service is okay. Correct.
LLC, then the company doesn't have to issue a 1099 to that guy.
Correct. Now,
So where does he report it?
he reports on his tax returns.
On his own returns.
He reports on his own tax returns. Correct. Either way, he's going to report on tax return. The question is if I have to give him a 1099 to say that he earned this money from me.
Really? Wow.
Okay? That's why you check off who you are, because if you're a corporation or an LLC, they don't need to give it to, they don't have to give you they may spit it out automatically, but they're not required to. Now, so these 1099s are sent into the IRS. Now, for practicality purposes, okay, sometimes people will say, and I think this may help you, Yeshua, sometimes people say, somebody will perform a service for us, and I'll say, fill out a W-9, and say, well, I'm not going to make more than $600 this year, so why do I need to fill out the W-9? And the answer is, for practicality, number one, if the person is a new vendor, I'm going to put him in my computer. Next year, if he earns more than $600, I'm not going to know that I don't have his tax information to give him a W-9. So, therefore, even though he may only be performing $200, he's only coming one time. So, in the future, I may use him, and I won't know in my system that I don't have him in the system. He's going to say, "Well, what do I have to give it to you? I'm not making $600." You say, "Well, if you don't make $600, we're not going to issue it. The computer's not going to spit it out. The computer will only issue it if you make $600."
How bad? Let me just ask you what.
Yeah, go ahead. I'm listening.
Line of work. I've been organizing also like Torah classes, and I've had people give Torah lectures. They charge for their services, but a lot of these people they don't want.
Okay. I can leave the tape on, but I'm going to answer your question. Okay. Let me give you an example. Okay, I'm going to get to that. Okay, I'm going to get to that. We've had situations in the CHYE Lifeline. Let me just think what I want to go through first. We've had situations in the CHYE Lifeline that we've catered an event. Okay, we've catered an event, and we have mashgichim. And mashgichim will say, and the mashgichim will get $250 to the event, and they'll say, I don't need to fill out a W-9 because I'm making under $250. I don't want to give you my information. I don't know if it's going to directly answer your case, but what I do in that case is I will tell the caterer, you know what? You invoice me for the mashgich. I can pay you either your corporation or I'm going to put it on give you a W-9. I'm going to give you a 1099, and you go deal with them. Okay? So that may not answer you directly, but that's what I have done in this case. Now let me just explain a few more things. Now, I don't have to give a 1099. I only have to give it for services. I don't have to give a 1099 if somebody's selling me goods. So now, if somebody's actually selling me goods, and the guy's always selling me goods, he's only going to be selling me goods. I don't need to have him fill out a W-9. Now, if Roto-Rooter is going to come and he's going to sell me goods and he's going to do services, or somebody who's going to sell me goods and do me services, what's going to typically happen is I'm going to pay him under the same name, and the computer is automatically going to give him a 1099 for the whole amount, and he can take whatever it cost him, and we're going to talk a little bit later, whatever it cost him, he can take that as an expense, as a deduction, whatever it cost him. Now, I had a situation recently where we had a situation in camp this past summer where they had to close the camp early because there was a flu influenza. Said the kids home, and somebody wanted to do something very special for the kids, so they catered an event for the kids after camp, and they charged way below cost. They charged tremendous below cost. It was like, but I said to the guy, and I said, but I still need you to fill out a W-9, and I have to give you a 1099. And he said, so I said to the guy, you know what, you're charging me way below cost. and I don't plan to use this person again, not because he's not good, but just not practical to use this person again. I said, when you invoice me, don't invoice me that you catered an event. Because if you invoice me that you catered an event, I have to give you a 1099. Invoice me that you're selling me 100 chickens and 40 cans of fruit. Invoice me for the products that you're selling me. And when you invoice me for the products you're selling me, then you're only selling me goods. You're not selling me a service. But if you invoice me that you're catering an event, I have no choice but to ask for W-9 and give you a 1099. And again, there's nothing wrong about that. That's one thing. That's totally legally because, again, he's invoicing me. But if he's putting on a lavish event and he's actually charging me for the services and the goods, then I have no choice but to either give him take a 1099 and take a W-9, give him a 1099, unless I pay him under two different names, where the computer will, But that's again, you have to get into practicalities over that.
It wasn't a corporation.
In this particular case, it wasn't a corporation. It's a good question. In this particular case, it happens to be it wasn't. Apparently, it wasn't because, again, I didn't ask him that question, but
The answer then is, let's say people do a wedding and there's a caterer, right? No one goes 1099, W-9 with their caterer. It's because the caterer...
Well, if you're doing a wedding, you're not doing it for a business. If you're doing a wedding, you're doing it for an individual. If you're catering a dinner for Ola Torah, then the ladies typically they're going to be a corporation. But if you're doing an event for Ola Torah and the photographer shows up and Ola Torah and he may say you need to fill
Services to individuals is different than services to a corporation.
Services from individuals. What was it? Yes.
If I call Roto-Rooter to my house.
Yeah, you don't.
My company is two different things.
Correct. The only time, and I don't want to get into this, the only time where somebody coming to an individual's house is when you get into the nanny issue, where somebody's coming to your house and they fill the criteria of being a salaried employee and they're your nanny and they're coming to your house. You may have to withhold taxes, and that's a totally separate issue. But if from an independent contractor, only if Roto-Rooter is going to Ola Torah, but not if Roto-Rooter is coming, well, again, assuming Roto-Rooter is a corporation. But again, if the person who's paying you is taking a tax deduction for it, or putting it on a business tax return, Ola Torah is not taking a tax deduction because they're not for profit, but they're putting it on their business tax return, then yes. But if it's only the portion that they're only coming to your office, then no.
So in general, a home office, you could write things off?
It's a very specialized issue, but you have to be careful because I don't want to get into taxes, but you have to be careful because if you charge the home office, if you sell that house, then you have capital gains for the office portion. Right? Okay, I don't want to get into it, it's very specialized, but let's say I have a house and I sell my house. Right. If I sell my house and I buy another house and I meet the IRS criteria, I don't have to pay taxes on the house I don't have to, on the gain that I made. If I sell my business, you can get into capital gains, unless you get into a certain type of rollovers.
Well, but you're renting it to yourself. Is that an option?
Again, but if you're renting yourself and you're having a business expense on the house, you have to be careful because one day if you sell that house, you make a profit, you may have to pay taxes on that where you won't have to if it was only your home house.
What happens if you're renting it? You're not selling it. I rent a house.
You're renting a house.
I'm renting a house from somebody.
So that's right.
In one bedroom, in one room, I make myself a home office.
You can take that as a tax deduction. You can take it. But I'm just cautioning if somebody owns a house.
Does this have to be a legal office in order to rent it for business?
That depends on the local zoning laws. Do they
intersect?
That depends on the local zoning office. That's not, Okay, so now, basically, so on the 1099, again, it's for services only. It's not for goods. If the technician, the person providing the service, gives you services and goods, typically the computer will spit out a 1099, and then we're going to talk in a minute about. Then we're going to talk in a few minutes about the expenses against it. Now, one other tax. I think get to, so I didn't hand it. Oh, I'm sorry. Okay. Now, in addition to withholding taxes, okay. Just pass it. Yeah, they're all the same. Yeah. Okay. Now, in addition to with federal withholding taxes, there's also the social. Also, it makes a very big difference. Okay, it makes a very big difference if the person is a salaried employee to independent contractor commissions. The other thing is that the employer has to take out from the employee Social Security tax, and the employer also has to match the Social Security tax. Okay, so 7.65%. This year it's up to the first 113,700. I don't want to get too technical here. There's a Medicaid, but just assume that it's 7.65% of the first 113,700, which means the maximum the employer will have to take out from the employee's pocket. In other words, from the employee's pocket, they have to take out a maximum of $7,049 based on the 2013 rate. And the employer also has to match that amount. So if you're a salaried employee, they withhold from you, and they also have to match that amount. What? Went up this year, yeah. The 7.65 didn't go up. The 113,700 went up. Okay, it's on this. It went up from 110 to 113. What?
I think he's talking about 6.2.
Okay. I don't want to get too technical, but the Social Security is broken down between 6.2, where it has a maximum, and 1.45 of the Medicare, where there's no maximum. Okay.
Have you discussed the healthcare Obama thing, whatever?
Let's see how far we get. Okay. Let's see how far we get.
Just hold on.
What's
Are you in a rush anymore, or you have to leave in 45 minutes?
Well, I mean, about 15 minutes. But
Okay, I just want to get a general consensus.
Okay. Okay. Let me. If I get there. Okay. Let me. If you're not in a rush, I'll slow down. Okay. Fine. Okay. Basically, the employer has to take out 7.65. Again, it's a little more technical than this. I just want to keep it simplified. The 7.65 is broken up into 2 points. 6.2% where there's a maximum, and 1.45 where there's a Medicare where there's no maximum, and then there's a 2.9. I just for simplicity, just assume that the maximum is 7.65%. I don't think you really have anybody that's going to hit the threshold. So the employer takes out half from the employee and pays half. The employee in an independent contractor, not the employer, but the person who hired the plumber, right? The person who hired Joe the plumber is not going to take out any tax. Is not going to take out any Social Security tax. But the plumber himself is going to have to pay 100% from his own pocket of the Social Security tax. It's called the Schedule SC, your self-employed tax. So again, there's on the salaried employee. The employee has to pay 7.65 to the maximum, and the employer pays 7.65. And just assume the maximum of up to 113,700. I'll talk in a little bit what happens if you go over that. And on an independent contractor, they don't have to pay. The contractor, the plumber, will have to pay the total amount.
So what you say Social Security is 113, means that the person's salary is 113?
Up to the 113,000, up to 113,000 gross.
If someone's earning 150,000.
Then from between 150 and 113, the difference, you only pay 1.45% of the Medicare. But just let's, for simplicity, assume there's no Social Security. But it's broken. I mean, it's marked down here. Medicare taxes 1.45.
113 household, or just an individual employee that works at this company, whatever employee salary?
The employee's salary for that particular employer. Okay. Now, what I'm going to get into in a little bit is what happens if I work for my employer and I make the maximum, then I go somewhere else and I work for them. Okay, I met the maximum. I'm going to get to that. Okay, I'm going to get to that. Okay, so now what happens is now a lot of times people say, again, we have these 20 criterias, but sometimes there's leeway to structure which way you want it to go to. Let's say sometimes people say, well, the employer would rather me be a subcontractor because they don't have to pay. It's called the FICA, the Social Security tax. If we can structure that, but the employee would rather be an employee because then they don't have to pay half the Social Security tax. But there will be times where this person would rather be here because he can deduct certain expenses. I'm going to get to that as I go down here. But typically, the employee would prefer to be here because the employer is going to pay half. An employer will prefer to be here because this way he doesn't have to pay that. Now there will be differences. Somebody's on government programming. Again, we're talking about where there's leeway room, where there's a gray area, or you can structure it in a certain way because this way he can take off certain expenses. I'm going to get to that. Also, sometimes, for instance, if my son is a camper, works in a summer camp, okay, and he doesn't make enough to file a return, but if he's going to be a salaried employee, they may not take off any taxes, but they can take off Social Security tax, and then he have to either wait until he gets it to file a return. He may prefer to be here because this way they don't have to take off the Social Security tax, and he doesn't have to go file a return. Okay. Now, one thing I do need to caution you about. See where I put that. One thing that I need to caution you about is go back to the one that has the Excel spreadsheet on the front. Go to the one that has the Excel spreadsheet. I just do it a little differently for my students because that's why don't remember, because sometimes I get to it in the middle of the semester. Go to the last page that has the W-2 and the 1099s. Flip back a page. Okay, the bottom of the W-9. The bottom of the W-9, the inside page. Okay? That's not on the W-9, but I added that in. Something you have to be very cautious of. Okay, what you need to be cautious of is I just need that back. Okay. Something you need to be cautious of. Let's say we decide that we're putting, if it's one person, two people. Let's say we decide we put in the whole that a whole group of people in the organization are independent contractors. Okay, means that if they're independent contractors, I don't take any withholdings. I don't pay any Social Security tax. Let's say the IRS comes and says, no, that group falls under the category of salaried employees, and you should have taken out taxes. You should have taken out taxes. You should have taken out Social Security tax. You should have taken out taxes from these people, and you didn't. Okay. Now they go to Joe the plumber, or they go to Jose and says, you have to pay your taxes. And these people don't pay their taxes. Okay? They don't pay the taxes. They can come to the employer and say, employer, these people were really salaried employees. You should have taken withholdings. You should have paid Social Security for them. They by law did not fall, and people that, the IRS wins in court, they didn't fall under here. They fell under here. And you should have paid it, and these people didn't pay for it. The IRS can not only go after my company for the withholdings that they should have withheld in the Social Security, they can actually go after people in the company who are responsible they can go after that personally. I don't want to get into the specifics, but they can go, it's called piercing the corporate veil, where they can actually go after those people. They can have to go after the controller, they can go after the CEO, the people who made the decision, who influenced the decision, they can go after them personally if the company doesn't pay. So, yeah, one second. So you just have to be very careful that when you classify somebody here, and again, if it's one or two people, I won't, but if it's a whole group and the IRS is going and reviewing that and says, no, these people are here, and they should have paid this, and you should have withheld this and this, and these people don't pay their taxes, they can actually go after the employer. And that's why the IRS will always try to prove, wherever possible, in a gray area, to prove that the people are here as there, because they don't want to be the collection agency, they would rather you be the collection agency. Yeah. So, sure.
That same burden also on the I-9 when it comes to like immigration status and stuff like that?
Absolutely. Okay, absolutely. Okay. Okay. Absolutely.
Yeah, well, you get something?
So who's?
Yeah.
So in general, it's employer's responsibility to do what when it comes to I-9?
It's employer's responsibility to do to make sure that they have the information, and not to make sure they have the information. They have
Here's
to.
what I'd like you to do, because the timing is really the 3 minutes left. Just without any articles, just say what each item is. And then whoever wants to ask questions could stay afterwards.
I don't mind coming back, but however you want to do it.
So just quickly knock off what each item
Okay,
is.
let me get to the important one. Okay, let me get to the important one. The important one, to look at the form that says the 1040. Okay, this is the important one, and then I think everything else is really gravy that I can either talk about at a different time or whatever you want. Let's look and see where this information falls into, because it's something very important I do want to point out here, and that's I was sort of going here. If you look at the 1040, okay, the first thing you're going to do is line 7. That's a personal tax return. Is we're going to take that W-2 and we're going to put it on our tax returns. Okay, it's line 7 on the 1040. Okay. Now the other thing is, just give me a few minutes. It's just important to point out a few things. Look at, okay, if you look on the front of the 1040 on line 12 where I've circled, it talks about a Schedule C, okay? And this is very important to see where you come in over here. And this really has to do with the Social Security tax and everything else. I'm over here, okay? Over here. But if you look on Schedule C, okay, if I am, again, I'm coming to Parksville and I'm going to, and I'm an employee, unless I itemize, I don't want to get into that, but typically any expenses that I incurred to perform that service, I can't deduct, okay, because I'm getting a W-2. So if I get a W-2, any expenses that I incurred for it, whether it's even traveling expenses or I have to bring my own tools or whatever it is, I cannot deduct those expenses. But if I'm an independent contractor, if you look on Schedule C, okay, I'm going to take the 1099s that I got, and I'm going to subtract my expenses. So sometimes, remember I said before that sometimes a guy would rather say, I would rather be over here than over here, because here I have to pay the whole Social Security expense. But sometimes Joe the plumber would rather be here because he can deduct certain expenses, and he's only paying his federal and state taxes and his Social Security on the net amount after his deductions. Therefore, again, sometimes people say, well, wouldn't everybody rather be here because the employer is paying the total amount? And the answer is no, because sometimes I'd rather be here because I only have to pay taxes on the net amount after my expenses. But if I'm a W-2 employee, whatever's written on my W-2, that's what I pay taxes on. Okay? I hope that's clear. If
someone's a W-2 and they spend every day $20 getting to work,
if they itemize, it's a very special. It's a lot simpler here. It depends if they start from their home or if there's a stop before their home, if they have a home office. It's a very specialized situation, and even then they have to itemize and have to be over 7.65. It's doable, but it's not practical. Okay, here dollar for dollar I can take it off, and I'm not paying I'm dollar for dollar. I can take it off, and I'm not paying federal and state withholding, and I'm not paying self-employed tax. Okay, I hope that's clear. The one other thing that I wanted to point out is go back to the 1040 and flip on the inside of the page. Okay? Okay. And that is, just one last thing. I think everything else is really, I don't really, basically, again, let's say I do my job and I max out at the 113,700. I max out at that amount, and then I go ahead and I have another employer. I go and teach for FDU. I teach for OCC, Ocean County College, or something like that, and I also work for them, and they pay me. But I already maxed out on my 113,000. I already maxed out on my Social Security. So what happens in that case? Again, I maxed out at my employer, so my employer stopped withholding Social Security tax, but I go work for somebody else during the same year, so how does that work? So the answer is the employer, again, assuming I'm an employee for somebody else, the employer will take out 7.65% from my pocket, take out 7.65% from his pocket, right? But the only difference is the employer will not get that money back because I didn't max out at him, I maxed out at somebody else. But I can put on my tax return on page 2 of line 69, I can go ahead and take that excess money that's on my W-2 from my second employer, right? Because I have 2 W-2s. One from my first employer that shows I maxed out, then one from my second employer that shows that there was some withholding, because if you look on the W-2, it says how much was my Social Security taxes. That amount I can get a refund on my personal tax return on line 69.
Doesn't that depend on how many months you worked there? If you only worked there 3 months or 5 months, you didn't make 113,000.
On the first guy or the second guy?
The first guy, you didn't work.
I'm saying if I maxed out.
If you maxed out in 2 months, you're saying you made
Right, if I maxed out in 2 months.
$1 million a year.
If I maxed out, correct, if I maxed out, once I maxed out, he stops paying me, but the other guy's, the other guy I'm not maxing out because I'm moonlighting by the other guy, so he's not going to, he's going to take half from me and half from him. The half he gets from me, I get back. The half that he pays, he doesn't get back. Should we want to start? Okay.
So one second, I just, schedule's a schedule and a system's a system. So if anyone wants to stay and ask questions and so on and so forth, you're welcome to do that. So, CHYE.
Thank you very much.
Finish the formal part of this. Just as, all right, so go ahead, do this one thing and then we'll shut it off and then.
Okay. All right, do me a favor. Do you mind just passing these out?
Sorry.
Mr. Ornstein, I even know your name. What? Here, I'm not sure if everybody has one. Here. You got one? Everybody got one? Okay. Look on the side. Look on the side where it says Chapter 1 on top. The only other thing I want to discuss. Is, as an employer, you have a right. I'm not getting into the Obamacare because it's just too technical, and really you should have an HR person do that. Okay, but I want it, as an employer. Okay, I do have a right to give my employees certain tax-free benefits. Okay, I can tell them I have the right to say you get health insurance is a big one. You get health insurance tax-free. I can say you get health insurance and we pay half and you pay half, and the half that you pay has to be tax-free. Okay, but there are certain conditions. Okay, the IRS is very scrutinizing this. There are certain conditions. If you want to give tax-free, I can also do it for my.
Giving tax-free.
Meaning, I work for CHYE Lifeline and they pay my health insurance. Okay, I don't pay taxes on that. Okay.
So health insurance $5,000 a year.
make it 15,000.
If you make, you don't have to pay taxes on that.
It's a tax-free benefit. Now, let's say they say, well, the health insurance, $15,000 a year. You pay $7,500, and we'll pay $7,500. Okay, the $7,500 that they pay is tax-free. The $7,500 that I pay out of my check is also tax-free. Okay.
Required by law to offer health.
I don't want to get into I don't want to get into to that. That depending on the size of the company, that's just again. I think you need an HR. I mean, that's a very specialized area. I think you need an HR person to come down and talk.
Referring to is, so to say, like pre-tax dollars, where like transit passes.
Correct. Transit passes. My dependent child care, $5,000. That's maybe what you meant for the $5,000. There's a $5,000 dependent child care. There's life insurance. There's actually I have it on here. Look, it's on here on the bottom, chapter 1. It's on the bottom. There's accidents, health insurance, dependent care service, life insurance. Okay, certain things that the employer will either pay and I don't pay taxes on, or the employer will say you can buy it and purchase it, and it's in our plan, but it'll be tax free. It has to be set up in a certain way. There are certain guidelines. Very simply, not very simply, I'm simplifying it. It's not simple, I'm simplifying it. Okay? In order to be tax-free, it has to be non-discriminatory. Non-discriminatory means I can't offer it to certain secretaries taxable and certain secretaries tax-free. Certain secretaries get it and certain don't. I have to have everybody in that group non-discriminatory. Either whatever I offer, in order to be tax-free, whatever I offer to one in that group, I have to offer to another. Now, I can offer it to the executives and not to the drivers. I can offer it to the secretaries and not to the drivers. But if I have to categorize it in a way where everybody in that group has the same option, either they pay 50%, whatever it is, it has to be in a way where it's non-discriminatory. Anything that I'm going to offer tax-free, which is on the book.
When you say tax-free, that means no one's paying taxes, or
Yeah.
Okay.
Means my health insurance, my life insurance.
So
the company offers it to me. The company either offers it to me at a benefit, and
The company pays someone's life insurance. A company takes it as a deduction also.
again, you're getting to very specialized laws. But let's assume yes, if it's in a non-discriminatory way, and if it's set up in a way, it has to be set up in a certain way, which I'm going to discuss. Okay, so it has to be in non-discriminatory, and it has to be set up in that way, which I'm going to discuss. It could be done. Okay, the answer is it could be done. So now, it has to be in a way that A, it's non-discriminatory, and B, it has, which means again, you have to offer to everybody in that category the same. Again, you can say you can't say that secretaries are making over 50,000 one and secretaries are making under 50,000 another. You can say secretaries who are making over 50,000 is an elite secretary and they do a different job than secretaries who make under. You have to be able to classify it in a way that you can back it up, that you can back it up, and that you can that you can justify. The other, okay, so again, if they're going to set up the tax-free benefits, it has to be in a way that's non-discriminatory. You can't say you yes, you no. If both of you are doing the exact same job.
What's the other thing?
Okay, the other thing is it has to be set up. It's called the cafeteria plan. A cafeteria plan means you go and you take this, you go and take that. You have to have it set up in a cafeteria plan. A cafeteria plan, if you flip the page, okay, it's called the simplest cafeteria. Again, there's companies that do this for very cheap, and you go to a company that does this for very cheap. They will set you up on what's called a premium-only plan. That's the most minimum, and they will set you up, and they within the government guidelines where you file something with the IRS, and you say we're setting this, and you set up this. It's called a premium-only plan. That's one other thing. And you set up this plan. You have a company that sets you up this plan. There's certain filings. But you also have to have everybody signing off that they were offered it and they either decided to take it or didn't decide to take it. Look on the page that says premium enrollment form. It means we're offering certain things to the employee. The employee puts their name on. The employee puts a social security number. And the employee has to put there that I was offered it and I either took it or I rejected it.
Even if you rejected it, you still have to sign.
Yes, because they have to show that you offered it to them. Again, if I'm offering it to the secretaries, all the secretaries have to check that they were either offered it or they took it, or they offered it and turned it down. But you need to be able to prove that it was offered to everybody.
This is only for pay-in, though, correct?
No, but they offer like
Free health insurance. I'm pretty much done. If they offer free health insurance, for instance, okay. This particular case, or if they're taking either they're taking money out of your pay. Either they're taking money out of your pay, or you're right. I take that. Yes and no. if they're taking money out of their pay, you have to. I have to clarify. You're asking a good question. If they're actually taking money out of pay, let's say they have the health insurance or the life insurance, then they have to sign that they were offered and they rejected it. Okay? If it's health insurance and they're not charging you anything for it, and they're not charging anybody for it, they don't need to sign this. What they are signing is, I agree for you to take money out of my pay tax-free. You're right. I need to take money out of my tax-free. If the employer is paying for the total amount, they don't need to sign this. But you still need to prove, still need to set up this premium-only plan, and you need to prove that it was offered to everybody in that same category. Okay, you still need to prove, whether it's in the employee handbook or again, that's for the HR people to come down. But you need to. The easiest way is everybody sign off. Typically, what you do is you have everybody sign off that they were offered health insurance and they took it or they didn't take it. Typically, the health insurance companies may require that also, that everybody who's offered it signed that they either took it or didn't take it. But again, the two things that are important is, A, it has to be non-discriminatory. Okay, in order to be held tax-free, and the company sets up a group plan, it has to be non-discriminatory. And B, again, if you're taking money from them, they have to sign that they were offered it, and they either took it or they didn't take it, and they understand that it's tax-free. Okay? Sure.